Hello and welcome to Outlook Money's Investment Made Easy podcast series. This episode is led by ICICI Prudential Asset Management Company Limited under the Investment Awareness Initiative of ICICI Prudential Mutual Fund. I'm Versha Jain from Outlook Money and your host for this session. Welcome to another episode in our series where we discuss the complex financial world and its intricacies and bring insights to enhance your financial understanding and improve your overall financial well being. This episode is brought to you in association with ICICI Prudential Asset Management Company Limited, and today we'll discuss a new investment opportunity ICICI Prudential Energy Opportunities Fund, a new fund offer, as we said, NFO, targeting the energy sector. The Energy Opportunities Fund is an open ended equity scheme focusing on the energy theme designed for those seeking long term wealth creation. The fund aims to invest in energy companies involved in the exploration, production, distribution, and processing of energy. This includes traditional sectors like oil and gas, as well as new energy industries like utilities and power. As per the fund document, India's ambitious environmental targets of achieving 50% non-fossil fuel-based generation capacity and reducing emission intensity by 45% by 2030, climate change initiatives, focus on manufacturing, and the growth in per capita income are all expected to boost demand in the energy sector. Here, we will delve deeper into the details of the Energy Opportunities Fund and explore its investment strategy, potential risk and rewards, and opportunities it actually opens up. To discuss this today, we have with us Mr. Chintan Haria, Principal Investment Strategy at ICICI Prudential AMC. Welcome, Mr. Haria, to this episode.
Yeah, hi Varsha. Always a pleasure connecting with you. Thank you.
All right, thank you, sir. Let's start the session now. So, to begin with, could you provide an overview of the Energy Opportunities Fund and what is the primary objective of it?
Yes, so it has been our endeavor at ICICI Prudential Asset Management Company to provide investors with investment avenues in themes which we believe have a good 5 year, 6 year horizon in terms of growth, and where investors' investments which are existing may not have a full exposure to. Besides that, if the market valuations are where they are, and there is a opportunity where valuations are cheaper, under ownership exists in that sector, and in the given context of the market today, we believe that the energy opportunities provides the same. India is going through a mega change in terms of being a service oriented industry earlier to now focusing on manufacturing across almost all walks of life, be it defense, be it auto ancillaries, be it capital goods, and the story goes on. And as far as our energy intensity is concerned, with the growing urbanization, with the growing increase in the number of houses, cars, we are seeing a greater demand for oil and gas and electricity, which are the two pillars of energy predominantly. And it is testimony to the fact that in the last 5 years or so, of the total capex expectation of 111 lakh crores which have been committed, close to 26 lakh crores or 24% of the capex is happening in the energy sector, because without energy we cannot grow. And hence, from a investment opportunity perspective, where there are enough large liquid names, where there is enough activity happening and enough liquidity to run a diversified thematic fund, we believe the Energy Opportunities Fund provides a good insight to investors who are looking to invest in the oil and gas, electric power, and ancillary space, which is going through a lot of capex. And it is during capex times that most themes work the best, is what our past experiences. With that endeavor, we are happy to bring the ICICI Prudential Energy Opportunities NFO for investors to look at to add to their existing portfolio of equity investments.
Right. So, what type of companies will it focus on and how will it select its investments?
So if we look at from a focus areas perspective in terms of the subsectors that the theme can invest in, energy can invest in oil and gas sector across all its three themes, which is oil exploration, oil marketing and oil refining. Besides, obviously, the oil ancillary companies can also be a part of it, like transformer oil companies, lubricating oil companies. Then in the power segment, you have the electricity generators, electricity distributors, and of course, the power ancillary companies like the transformers, the wiring cables, etc. So you have a very wide range of stocks within the two large sectors, which is oil and gas and power. And we also know within power, of course, while thermal energy has been growing in India, the renewable energy space is receiving a lot of attention of the government. Government is focusing and has obviously also increased its outlay as late as the recent interim budget, which was announced. The government has increased its outlay for renewable energy, wherein the focus is on green hydrogen and solar. So clearly, solar, hydropower, wind, green hydrogen, and allied renewable energy also becomes a very good and exciting space for the particular fund to invest in. So across the board, anything to do with energy is going to see growth in India, and we are trying to bring it all within one roof via the Energy Opportunities Fund for investors to invest through. Thank you.
All right. So any company which is related to energy in any manner, you will be concentrating on those and pick up the best out of these. Okay. So can geopolitical events also have an impact on the performance of this fund?
So geopolitical events, like we said, we saw in the last 1 year or so, or maybe now 2 years, wherein when Russia-Ukraine war had started, the price of oil could have gone up sharply, but the government took the decision to start importing significant amounts of Russian oil into India, which ensured that the oil prices globally do not go up. We used to not import much oil from Russia. We used to import less than 3% of our oil demand from Russia, but today we import almost 35%, which helped the oil prices remain under check. So yes, geopolitical events and government policies do impact this sector or the energy sector meaningfully. And to that extent, it is in fact the government focus on this sector across all forms of energy and verticals, be it oil and gas, hydro, nuclear, solar, across the renewable energy chain, which is giving us the confidence that along with the growth of India, where today we are consuming 250 gigawatt, we need more than 500 gigawatt in the next 6 to 7 years of electricity. Today we are importing roughly about 5 million barrels of oil. We'll start importing about 6 million barrels of oil in the next 4 to 5 years. In fact, globally, while it is said that oil and gas has no future, almost one third of the global oil demand increase in demand over the next 6 years is going to come from India. So India is going to be a driving force for the growth in the oil and gas sector in terms of its domestic demand. And hence, we believe that while the government is focusing on a particular sector and geopolitical events do have an impact, but with the government being aligned towards growing this sector, because without growing this sector, you cannot grow manufacturing. You also have to satiate the appetite or the demand of Indians who are becoming wealthier and are demanding more and more electricity for their cooling requirements. As you know, the Earth's temperature, and in India specifically being a hot country, air conditioning requirements are also going up meaningfully. Today, we have close to 6 crore cars on the roads in India versus China's about 40 crore cars. So we'll see the number of cars growing meaningfully also, which will require more petrol or diesel or electric vehicles. So effectively, everything in India in terms of energy is going to see meaningful increase, and we have to provide for it, which is what the government is most focused upon. And hence, we don't have to worry about either the geopolitical stress or the government policies because they are going to be aligned towards the growth of this sector and which should be in benefit our investments in the Energy Opportunity Fund.
Thank you for clarifying this in detail as the government policies are aligned with the energy and the consumption is going to increase in the future. Now, could you tell us what are the potential risks associated with investing in energy sector and particularly in this fund? And as well as what are the potential returns one can expect?
So, as far as risks in investing in the energy sector is concerned, one risk which we spoke of is obviously the government policies, but there at least for the next 5 years, since we know government continuity is going to be there, the risks are limited, plus the demand in that particular sector is going to be strong. So that risk is also nullified as far as the sector risk is concerned. The broader risk, of course, remains of the equity markets. So it is an equity fund, equity oriented thematic fund. So equity market risk remains, and there, because this theme has diversification capability between oil and gas and power and the allied, while it is a theme which may not be able to defend itself by moving into FMCG or technology like a diversified fund, the risk remains that if energy goes through a correction globally because of some unforeseen event, then this fund will get hurt. But in India, the situation is completely different. The world over, the demand for oil may be coming down, but in India, the demand for oil is going up. And hence, we believe firmly that while there are risks which are related to any equity investments, and hence the investment should be of a 5 year horizon, they are pretty much mitigated given the situation that are here present in the current conditions for the energy sector. So I would say the biggest risk is of equity and the equity market risk carry. But other than equity market risk, it is a sector thematic fund which can have its ups and downs. So overall investment allocation to the thematic basket, what you would do, you must keep that asset allocation in mind as always for all your investments, and ensure that you have the ability to average on the way down, plus have a 5 year horizon. In that circumstance, we believe that this sector, the phase at which it is going through, should be able to give a good, reasonable, risk adjusted return to investors. How much return can it give? Of course, that is something which is always difficult to predict. But we hope and believe that if the growth of India's energy sector is significant and the companies are able to participate in it, then via the investment in this fund, the investors would also possibly able to get the upside which is present in the energy sector in terms of its growth. Thank you.
All right, you have given overall the idea, but I actually again want to ask that what makes this fund unique compared to the existing funds in the market in energy sectors?
So as far as the funds in the market itself are concerned, very few funds are actually available in this particular theme in the market. I think there are only a couple more. And as far as this theme itself is concerned, because there are such fewer opportunities available in the market, we believe that it is uniquely positioned to allow investors to participate in India's growth journey. As far as the uniqueness of ICICI in terms of managing of thematic fund, so from the time of launch itself, it is very well managed in terms of how the stock selection is done, where valuations are given a key focus, plus the diversification of the fund within the opportunities available within the subsectors of the theme are also well taken care of. So our focus in terms of thematic funds right from the last 5, 6 years, if you look at it, be it manufacturing, innovation, housing, transport and logistics, even PSU, has been on the fact that at the time of launch, at the time of initiation, creation of the portfolio, we have a reasonable balance in terms of the diversification, plus ensure that the management quality, balance sheet strength of the companies is good, and the valuations are not so high that from there the risks to the investors increase meaningfully at the stock level. All this put together in terms of the timing of the launch, the initial creation of the portfolio, plus the fund is closing before budget, so we should be able to invest before the budget, which is scheduled to be on 23rd of July. That also gives us comfort because we are expecting the budget, which is the full budget for this particular financial year, to continue with the same momentum which it had showcased in the interim budget itself, and which should also have a positive rub off on the particular sector. So the uniqueness of the portfolio, of course, is that we do not have too many similar funds in the market, and within
Mhm.
the energy sector itself, and within the experience that we bring in terms of thematic investing, we believe we have an edge in terms of the way we manage the themes and the thematic investment bucket, which we've already shown in the past. And of course, the sector itself is quite in a good shape as far as demand is concerned. So I think all these three things put together makes this fund unique, and our ability at the time of launch and creation of portfolio is what probably sets us apart, is what I would say. Thank you.
All right, so timing of the launch and closing before budget and valuation are low. So according to you, the sector is in good shape as far as demand is concerned. Now, what do you think? Who should invest in this fund, and what should be the time horizon? You said this is 5 years, but is it the same or is it more? What should the investors keep in mind while investing in this fund?
So, okay, as far as who should invest in this fund is concerned, clearly someone who has already built a good equity portfolio in terms of diversification and is looking at that added beta capability or that added kicker in the portfolio through thematic investing. And we are seeing a large many investors moving towards themes and sectors in the last 2 to 3 years because they already probably have a certain equity portfolio created and are happy to invest in themes. So it is for those investors who already understand how themes work in a cycle, and they already have a base portfolio created out of asset allocation funds, flexi cap funds. And once that base asset allocation is created, you basically look at thematic investing as an add-on. And within the add-on, of course, as far as energy opportunities fund is concerned, it's meant for all investors because you can look around in terms of the energy intensity that you and your family may be going through. You're increasing your demand for fuel, petrol, diesel, your flying time is increasing. So more jet fuel is required. You have air conditioning in the cars and the house. So more electricity is required. And essentially that is what the play is. So whatever we are consuming more ourselves, we are getting to invest in them and grow with the companies which are producing the electricity or part of the oil exploration and marketing chain. And as far as time horizon is concerned, of course, you've already mentioned 5 years. And why 5 years essentially is because any theme generally plays out when the theme capex is happening the maximum. So if we look at from an energy perspective over the next 5 to 6 years, maximum
Mhm.
amount of projects and announcements and capex is likely to happen, which should benefit the companies because the growth visibility improves. With the growth visibility, the markets will start giving those kind of multiples to the companies. And that is essentially what will make this 5 year time horizon very interesting time horizon for investors. So I think investing today, keeping space for averaging, and having a 5 year time horizon, that should probably give investors a good enough experience in this particular theme given the risks of themes which we already spoken of. But yes, 5 years is a good enough time, we feel, for someone who is looking to allocate to equities at the current market levels, given the relative attractiveness as far as valuations and the relative growth opportunities which are available in the energy theme. Thank you.
And here is my final question. As the NFO is open for subscription until 16th of July, what advice would you give to investors who are considering this fund to invest in their money?
So if you're looking to invest in the NFO, of course, it's quite easy to invest in the NFO. And I would say that if you don't want to wait till the last day, there's a choice of you investing in overnight schemes, which will then get transferred also to the NFO, or otherwise through your advisors, through your own investments, you can go ahead and invest right away. Your money will be put to use uh, when the NFO is closed. And oh, since it's a 5 year investment, it won't make a difference if you invest 3 4 days before the closure of the NFO also. So don't necessarily wait for the closure of the NFO. If you want to invest, you can invest right away or through the overnight fund combo of investing in the final scheme at the end of the tenure of the scheme or at the end of the closing date, which is on 16th of July. So I would say look at your overall portfolio. If you believe India's energy growth story fits in your overall investment requirement, please go ahead and invest in it and give it 5 years. We believe that along with India's growth in energy, it will energize your portfolio as well. Thank you so much.
Thank you, Mr. Haya, for joining us today. We appreciate your presence. This discussion has provided valuable insights. It's important to note that the contents of the discussion should not be construed as the editorial recommendation from Outlook Money. And with this, today's episode of Investment Made Easy podcast series comes to an end. We trust you found our discussion engaging. Stay tuned to Outlook Money's podcast series to further explore investment topics. And don't forget to like, share, and subscribe to stay financially informed. We welcome your suggestions, feedback, and questions at letters@outlookmoney.com. Stay tuned for our next edition, and until then, stay informed and continue to follow Outlook Money, your go to personal finance magazine.